Hi, I'm my friend Crypto Warlord, and this evening we'll be looking at Solana USDT. We will want to be looking at Solana BTC, but we'll keep that for the gang. Okay. What I am using here is Alpha Trading Tools, and Alpha Trading Tools helps me give me outliers, helps me nail out statistical levels within the market, probabilistic levels in the market. When they touch up, well, my stats and my probs line up, so that sounds like a good move, doesn't it? So then we go and we look for volatility and the direction of volatility. Shout out to Alpha Trading. We keep on nailing this. And what we'll be doing is we'll be playing around with Solana USDT this evening. We'll be having a look into its levels. So maybe some guys will be seeing open in about, if I was to add 30, boom, in about 2 hours and 40 minutes. So we'll be looking for at least the outlier ranges if it does start to kick up, going towards the close of today and the open of tomorrow, which is in 2 hours and 40 minutes. Okay, let's get to it. So what we're going to start out with is we're just going to observe the 90-minute time frame. Okay, so the circles are representing weekly levels. This is called our VRE. Then the lines are representing daily levels. So the yellows are the means, so that's a weekly mean, that's a daily mean. And then we'll go looking for our monthly mean, which is like a star sign. So our monthly mean will be quite high up. And this is our monthly mean at $60. So the volatility expanding from the downside, we have been able to at least lift our means from this point. So this was our first print above our previous bear market mean. So obviously we're going to come in and touch. Okay, well, bear market, bear with us here. We'll see this is a daily print to either close above or go below. So this would be a nice place to fight off for daily close. Either shorting to be looking to add somewhere here, depending on if we have positive drift and then volatility expansion also is positively correlated, that will give us another leg higher. Vice versa, if we have negative drift from here, let's say, or even whatever bounce can come out of here, we'll be monitoring for negative drift. So negative drift will trim it down, then we'll wait for correlation to be significantly negatively correlated, and expansion down, a wave of volatility, and we'll go start looking at this previous weekly mean, $31. Has a whole bunch of previous market memory places that it can start to look at. Okay, so this is the 90-minute. So this thing will close in about an hour or so. Let's see what it looks like on this screen. Cool. I need to make sure that I am looking at the same screen as you guys. There we go. So I'm going to just quickly pop on my AVR flashes. So this is it's like a alpha volatility radar. Percentage returns helps me know when volatility is mean reverting, so aka zeroed, and looking to expand. And then this is what I'll use as statistical data points in the market to throw up probability cones for later on. It just helps with me know that all volatility points within just my data set have zeroed out, and from there I can throw up a random distribution in which you'll see that it will touch bottom, top, and then through its mean, and then from there decide what it wants to do. So I know that first signal is at least very sketchy, or because of the volatility cones, I know it's going to be limited by the volatility cones. That's where I'll know that the model goes. That's where I know my model is wrong, because I can base it off the volatility cones and go, okay, just a 1 minute candle close above this volatility cone really does help these indicators with drift or expansion. Which way is it correlated? So the volatility cones will help me with that, especially when the markets are ripping through. I use Laplace distribution, only Laplace distribution, for matching up just my random distribution theory. Okay, So we have a 90-minute here. This is our weekly mean. Let's see if I'm going to throw it up on the 24 hours so that we can have a look at where we have come from, what our general market review is, given that this is my first. I should actually be doing. I'll do a longer term market review when there's a little bit more data on this. Maybe I should go look on FTX, but for now we'll just be looking at about the 24 hours. So what we'll be looking for is pretty much as I said. So we had our daily open, our daily volatility mean over here. If we'll go look back on the 1 minute, you'll see it would be fighting around at least. This looks like a big one down, but it would have been fought through, especially with our big candle up. So we'll be looking for at least to hold the structure out of this leg, right? There can be a little bit of chaos, right? I trade XRP, guys. So this is we shed different blood in the streets, right? So here's how this operates. Is you're going to move from $38. Obviously, we're going to be wanting to close either above this thing for today. So if we print above our VRE daily 1 to the upside VRE level, that will give us a bullish indication on maybe like a little higher term time frames, considering it is looking a bit draggy down here. But this is where you'll start to find bullish divergence start to play out. Have a drink. Okay, so 12 hour. We'll drop onto the 12 hour, just see how this is sitting and how structure is looking. And we'll throw on our flashes. I did notice our daily doesn't have any flashes as of yet, so I don't have a reason to put up the volatility coins on the daily, but I'm looking to put up the volatility coins on the 90-minute. So yeah, we just have my longer term look back period is still maxed out. So I'll be looking for positive or negative drift. Sorry for that, guys. Okay, so 12 hour, we've had our outlying events, and if I was to throw a coin up here, this would be on like the first distribution or the second distribution out. If you were to use normal distribution, it would be on the first. It would be on about the third, considering the look back I use for my data set. Okay, so that's 3 coin flips in a row pretty much to the downside. So we'll be looking to at least be a little bit random back to a mean, which would have been set somewhere here. So that's 41.80 cents if we were to put a cone up on this area. Okay, so we're going to pop it on the 4 hour. So what I can see is that my volatility is a little bit weighted to one side, and okay, we'll do it more on the 3 hour here. I don't like using the normal time frames in which everyone's using. So if I really wanted to, I could throw up a volatility cone. I would like to throw up a volatility cone on this 3 hour, obviously being half of a 90-minute. As you can see, that dojis do speak a lot, especially when volatility is flat. It does make all the difference. So yeah. So we'll go looking to put up a volatility cone in 2 hours and 30 minutes from here. But that will take at least, maybe 2 days to play out, to get from bottom band to mean and see where it wants to go from there, or if it wants to get from top band down to mean and see if it wants to do what it wants done. Okay, so this is just basing us off over here. I need to drop us into some lower time frames so we'll start dropping it from low time frames using our whole setup. Okay, so we just changed that there. That's cool. So we have expansion, sloppy chips. We've had our outlier events. Still a little bit of neg on there. Expanding from the bottom side, pushing through a mean. Okay, so I'm going to open this up. I'm going to zoom in. I'm going to open this up. I'm going to zoom in. And volatility is flat, as we can see by these two flashes, at least for our thin tail event and our fat tail event. So I know the law of small numbers and the law of large numbers must be accounted for right now. Okay, so we can see that this is lifting up, obviously, so this would look quite cool on the 1 minute. Okay, so we have mean reversion point. So what you see here is we have a little bit of bull div forming, which has come off of previous market structure in here. Just our returns, this candle filling us up quite high, lifting our returns. So what they're wanting to do here, at least on the 3 hour, is really, in order for my super scalper to be correct, I'd like this candle to print above here. That way I'd look for maybe continuation to the upside. And this is just on the 3 hour, because if this prints up here, then it will help this mean revert, which is, let's say, the next candle's best entry. So you'll usually look for a little fill down, catch on the mean reversion, and push through. The general idea is if this closes here, then that just helps with this being a bearish defense. So to put this will go red like it is over here. Let me just drag that. This line will go red like it is over here, and that's just pretty much just because the candle closes here. So if it opens the next one here, this will automatically go red. And now that could trigger a few things, obviously being a couple hours and 30 minutes away from daily close. So now we're going to drop it in on the 90 minutes. So we have sloppy chips, expanding volatility to the downside. Right here we have another push. So this is us on the 90 minute. So here we have another push, which is pretty much lining up with the 3 hour we saw. And it's telling us the same thing. Telling me that in order for this to be true, this has to go higher. So if this goes higher, then this is true. If it doesn't, and it closes below this line, then it's not true. Then you go looking for a short. Okay, this is just on the 3 hour now. And given we have touched our daily volatility mean, I wouldn't, this is crypto. Okay, this isn't going to be too hectic of a ride. So this will be, what, a couple cents move. So half a cent move to the downside can be your signal for failure from here. And then this failure will have a weekly volatility mean to defend it. Which then means we'll have to look up on, let me make this smaller. We'll then have to look up on higher term time frames to look for drift. Okay. So let me just make that bigger. I can lift this up. So there we go, we're lifting in. So there we go. So if this fails to close above this line, we'll come and test the weekly volatility mean. It will help defend the denied mean reversion, well, aka just tell you that it's more bearish. So that's what you'll be looking for. So we have some contraction. So this will be a little bit of a fight down here in the right corner. So this is Shannon Entropy. I love Shannon Entropy. And these are my Pearson correlations. So this is how I'd know what the direction of the market is. Pretty simple. This will help me define all these points to know if these closes and stuff, they work in tandem. Everything needs to line up. Okay. So what we have here is we have contraction positively correlated. So contraction positively correlated. As you saw here, that causes for negative drift. Okay, but now we're negative drift. I want to drop in real quick now. So we have some negative drift coming in, but that only happened, it pumped us into negative drift. So it would need to close above this red line. So let's drop it down on the 45 minute while we're watching the 90 minute, man. It's like watching on the 1 minute. Okay, so this is what we'll see. So we can see on the 45 minute here, contraction, that's giving us the float up. That's what's fighting the 90 minute, is this contraction. Sloppy chips though, so it might not be so aggressive, but it is close enough to close above the red line. So that can be looked at as something that can help defend this mean reversion. And as I said previously, there's a higher time frame here, I think it's 3 hour. Also, it will help with the RO's mean reversion point. Okay, so now we'll drop into the 15 minute. This is what is being fought for. So as you can see, so actually, even if this candle closes here, this 15 minute, then next one, so it's only a couple cents difference. Let's see, it's 1 cent difference. So 1 cent difference of, this is on the 15 minute by the way. So 1 cent difference of a very bullish market out of here, you could say. I'd pick up a couple cents, maybe $1 to the upside. We'll have another look. or the failure to the downside, because if it prints the candle below here, it will be quite hard for it to break through this VRE level, the first outlier of the weekly. First level S1 to the weekly. Okay, so we have some bullish div building up here on the 5 minute. It's been hung up around here. So this is our high term ROs. Oh, sorry, let me look at the 15 minutes. We want to see what's happening on the drift. Contraction, so I look at that, it's a little bit confused. Let's wait for that to load. This is still confused. Okay, so we're going to go search for a little bit more clarity, a little bit lower down. And from here we can see contraction negatively correlated. That's helping with the float up. And this, if this is, we want this one to go green and this one to stay green. And we want these to stay here. That will help this easily cover ground, whilst the smart bear will lift his trades because he knows that positive drift is just going to send the algo straight through the walls. And if he was a clever seller, he would see this coming and he would want to lift higher because he knows that there's positive drift, even if he is a seller. And vice versa, if you're a buyer, you see some negative drift come in. This is fine, this should get picked up. I prefer it on the 1 minute. This will get picked up, yep. So even if you're a seller, if you're a buyer, for example, and you have some negative drift forming on this guy, which will be inverse of what you'll be looking at here now, which is why that is being picked up for free, then you'll know to hold out before you want to put in your long. So now we're going to go play around with what we actually play around with and what I make my eyes blind with every day. And thank you so much, Alpha Trading. Okay, so we have some contraction, we have a little bit of confusion here, coming into a band. I think we should throw on both UMP levels because this strategy needs to work together. And then we will go and put a cone up on the 45 minute, guys, or the 90 minute. I want these outliers. Let me drag this over. I want this section here, this one. I want them all to line up. So this one's a little bit extended high. Not good for volatility cone. But what I will do is I'll quickly switch everything off. And then we'll go hunt for a volatility cone. This is the latest distribution in price, so we can snipe points. This, just before this little pump over here, we can also snipe a point. Let's see if they happened within each other's mean. So I'm just going to put a vertical line. Just to segment. Cool. And drag you. You're not filling. You're not filling. Who's filling? You're not filling. Anybody else down here? I think you, yes, you, my friend, are a good friend. Okay, so let's just quickly check the percentage difference between these guys when they printed, as that would just help further on. Don't ask why. So if we were to move from the bottom of said candle to the top of said candle is 1%. Cool. So we know that we have 1% difference, a return in our mean reversion points, and it's went up. So let's see if we can fight. So you'd want to put up 2 cons. I'm going to keep to my rules, and I'm going to stick to the latest one because that's when I know that the trend has changed. Okay, so you guys, let's get this rolling. So what we will do is we'll open PB and we will go here and we'll just put 50 for now because I should have been ready with the price and date. We'll just do date range. So I gotta actually wait for this candle. Man, it is so tricky. Binance is a little tricky. Okay, so how many bars are we back? We are going to be 71 by the time I can get to it. So 71. Cool. Throw that up. Switch that on. Le place distribution. Lovely. Let me just double zoom in on this coin. Are we on the right one? Indeed. Okay, so now this is how I target certain levels. Have I got rid of this thing? Boom. Okay. So, it comes up, hits its mean. We know that the mean is here. You can see some candles, obviously opening and closing on the mean. Obviously you can draw a line, but you sort of catch stuff a little bit perfectly. It's getting a bit chopped up here. So what I will start to use for clarity, let's see if you guys don't go blind. So throw some dev bands on there. Cool. So we bounced off of our mean, which as our mean crossed, our general trend continued into this band. We came up and we hit our other, I call this a volatility net. I'll switch the cone off. When I started looking at it, before I switched on the recording, it was quite contracted. Yep. So there, caught the market. It's quite a neat little fixer. Come on. You can catch channels, negative drift, iceberg orders, best fills, trend continuation, PIM. So what I usually do is these two bands, so 1, 2 pink, or 1 pink, 2 pink, 1 blue, 2 blue. That is my trend if we're inside of it, then I know we'll just be ranging in between them. As soon as we print a candle outside of it, I know that we have opportunity to hit quite far out. And then when it gets to the first one, I know that my model might be a little bit broken here, and then I can switch on VRE levels. And then the VRE level just tells me that it's going to break. Well, the price action returns are just going to break into the VRE level. Pip, fill up, catch it. Then you'll go, if you go looking halfway, we'll throw up a reverse wave trend and the UMP. Okay, this would be a little bit of a tricky catch, but given that this data has been printed later, this pink line would have told me that it would have been basing here, and because these candles had to be a big return, this shut down further. But that's for a whole other time. You gotta watch this live. Okay, cool. So you can see generally what we're using here. We're gonna throw our cone back. Do we have to readjust it? Please don't tell me we have to readjust. I don't think we do. Cool. Onto our cone. We've left the VRE level. That's fine. Yep. And UMP that lined up with perfect scoops. Cool. So we're going to go back to our general law that I have for the setup. So this is what? Just want my VRE on, so my depth perception is cool. Lovely. So we can see that the cone obviously gives us the opportunity to hit our weekly VRE. Coming into our cone, I need to switch the cone off now, but you can, let me zoom in. This is so beautiful. Okay, cool. So this is 1, 2, 3, 4. That's 4 coin flips in a row. So for this, in order to be bullish, pretty much literally just needs to close above here. It will come in, wick the cone, and carry on up. This is what I consider a front run. So literally you can spot it from there. So you're having an outlier event confirmation. So this is why everything needs to line up. So we're gonna have to wait for here. Okay, sweet. So this can drift up. So if they were a smart seller, for example, they would maybe want to lift their orders a bit higher up. As the bots and the algos will be able to buy this up cheap. Not anymore. There you go. So now if they pump a little higher, they pump themselves into a dump. They need significantly correlated to the downside with this contraction, and then they'll just float out of this. So what's nearly A? Oh my gosh, it's just 20 cents. Okay, cool. So that is what we're looking at. This is our distribution cone. And what are we in? We're in the first band. So for this, for the higher term time frames to look like they want to defend any of this downward price action that has been happening throughout the day, any from here down, they will want to base it off here. So they'll start wanting to make the bullish time frames look bullish at $30.37. Your first signal for noise is going to be a whole bunch of places, but let's turn off the cones so you can see how the cones work. They work well. I'll just quickly flicker between the two, but these are your levels maybe for like the next 4 hours, so that I can go to sleep kind of thing. Cool. So 80 dev bands off. You can see how the VRE just the PB cone does its job. Then we'll put on our dev bands and we'll show you why price action does what it needs done. And this is where we're going to look to touch. And then from there, we'll look for a little bit of resolution to the upside, I would say. Furthest point out, for if you wake up and you want to be sad because you're holding your things, you'll catch your problem 2.4% to the downside from whenever this gets posted. And let me switch off the cone. Oh, by the way, this is the 12th flip, so it will get here, and then it'll more than likely want to push back to at least the center of the cone or to the center of this mean. But let me go up. We'll go up from the same point to 3 point, we just call it 3.2% to the upside. So those will be a general terms. It's quite big. It's 5% market between the next 4 hours. So now I'm just going to switch off the cones, leave my VREs on, switch them on. Cool, that's what we'll call it. Let it close. Maybe you guys need to watch that. And now this is 1, 2. This is now our higher time frames. So you'll see that RO, the thing that was lying here in the middle, is now getting closer to mean reversion. So in order for this to push for mean reversion, this candle needs to close above here. The next candle will need to close above here. If not, they're just going to get trapped out in here. So then we'll do a super projection on the cone until, let's see, have we had all the flashes? We haven't. No, it's just the same last dizzy. That's cool. I'll switch the dev bands off and we'll do the cone distribution with a reset. And from this point, right, these will be our levels. So if anyone on YouTube tells you, let's say, well, okay, so an hour before close, your stupid moon boy proposition is 40 cents, 16, and if you're an ultimate bear, you'll get wrecked at 37.75. Hope that was helpful. Oh, I love this part. Yeah, back to the mean. All the high term time frames. Let's go check out the 1 minute. We haven't flashed. That's above. I love it. Cool. Sloppy chips. Sloppy chips. So this was our positive drift. Working out. Oh, we want to do a 45-minute flash. Sorry, this might take forever to upload. Oh, perfect. 45 minutes and doing shit. 90 minutes. This is the middle, but I'm brave. So we didn't have a final print on our 90 minutes. I was hoping we'd have a final print on our 90 minutes. So 3 hour hasn't printed. Okay, so now, given that the 90 minute and the 45 minute haven't printed, the flash is, I don't know if I should do this. Okay, yeah, I can do it from this last. Oh, yeah, oh, it's beautiful. So this just tells me it's out of like a very high logarithmic mean. It's just another way for me to know where price action wants to just not be in. When I zoom up, anyway, so let me drop this off. PB cone 3 back and 3 back, push. Okay, cool. And our 3-hour cone gives us way wider ranges. I would like to prefer to line this up with my VRE levels so that I can line up coin flips with my probs and my statties, and then we can make correct mathematical observations. Sorry, I'm talking nonsense. There we go. Cool. So this is a bit fresh of a cone, but this is why we use it. Okay, so we can see that our first, okay, so to get to this band, we'll have to go through at least 3 levels. The opportunity is there. Our first band, I've obviously tested that now, and it's also lining up with a VRE level, at least to get trapped in and wicked in. So there you go. So 37, 33, and 39, 90 for the mathematical side of things. And the model breaks on the 1 minute UMP, about 5 cents difference from there. Right now it will say 5 cents. But by the time volatility gets there, it won't. It will have shifted a bit. So this is our main reversion point. Let me switch off the cone, and I hope you guys have a lovely time. I will be doing some more Solana. I like Solana. It moves quite nicely with our tools. We've got a little long-term flash, so something might start to happen here, but we want these all flashing at the same time to tell us that there's a new trend on the way out. I hope you guys have a good one. Ciao Bella. Thank you all for trading tools. Let's get those Catalina whales and Bubble Goose ballers, gents. It's a beautiful thing.